Last week I predicted a green week. Actually, the title of the podcast was Green, 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 followed by a few companies. But this week it will be all about DeepSeek. DeepSeek is a name you should put into your memory because I am pretty sure DeepSeek will determine the week. And if you wonder what DeepSeek is, just keep listening. You are listening to the StockInvest.us podcast, Trading Tips with Jim, as we head into week 5. And after introduction is done, you have to remember to like and subscribe to the podcast to make sure it continues to grow. And I started so nicely to say DeepSeek. So what is DeepSeek? Well, I discovered DeepSeek early last week. Actually, I've been following them a little bit before, using their AI models, but last week they came with a new version, and that version was just flabbergasting good. I started to use it instantly, and then the news broke. And if you open your eyes properly and checked markets today on the Monday, everything is red. Nasdaq futures are down 2.8% as we speak. And the reason? DeepSeek. So what is the thing about DeepSeek? Well, DeepSeek is Chinese AI, and what is so special about that? First off, the performance of the AI model is astonishing good. It is as good, and in some cases even better than OpenAI's O1 reasoning model. DeepSeek is also reasoning, meaning that it has a small discussion with itself, trying to find that ultimate good answer to your question. And being as good and even better in some places, well, that doesn't make for much, does it? But DeepSeek is released at insane low cost for if you are subscribing to DeepSeek, using DeepSeek for your AI agents or whatever it is. The API cost is insane low compared to OpenAI. And the reason, and this is the pitch line, DeepSeek was developed at extremely low cost. If you follow this, and I do follow this and many other things, US have tried to ban all sort of chip export into China, make it very hard for China to keep competing on the AI race, because that's the thing that's been hot and will be hot for quite so many years, I believe. And based on this, we had NVIDIA and so many other AI companies, just AI producing the chips, by the way, not being an AI company as such, but producing the chips used for AI. And these chips was banned. And semiconductors, there's a whole story behind these things, were banned from trying to make China develop anything fast. And suddenly, and I told you this so many times before, out of the blue comes something, and DeepSeek came. And DeepSeek came being very, very good and being built extremely cheap, meaning that the high focus on NVIDIA and the need for stronger and stronger chips suddenly is questionable. And NVIDIA being as big as they are and being one of the absolutely biggest in the exchange, of course, when you start to wonder, is NVIDIA absolutely worth all this money, which currently is sitting, I think it's above $1 trillion. Is it worth that sort of money? You start to question. And many people are, because the futures, they are way down. And most of this is due to NVIDIA and other AI-related companies. Because suddenly we see that China can compete in quality at less than a percent of the price, using washed-up ships, if you like that term. But the thing is, no, it costed so much to develop O1 reasoning, and now China is out offering super cheap because they were able to make it even cheaper and even giving it as an open source. And that brings me into the thing which is about trading. Well, here we have a disruptor in the market, and this disruptor will most likely cause the AIs. And again, not only those companies that work directly with AI, but producing chips, whatever it is. Suddenly we can question their values, and knowing the size they have in the market, well, we are doomed for a spectacular week, in my opinion. It will start with fear, guarantee you that it will start with fear, as people try to reckon, where are we now? Are we going to head for a huge fall in Nvidia? And Nvidia being as big will pull the market down, meaning that most stocks will be pulled down by the size of these big companies. When they start to go down, the rest of the market will follow. Are we standing just in front of a huge market fall caused by a small company called DeepSeek? Is that the thing? I'm not sure, but I know that the opening today will be the question that is around many tables, trying to figure out exactly what and how much does DeepSeek affect the market. But the market is more than DeepSeek. DeepSeek is just a disruptor. It comes in from the left and to disrupt the market, and we have to start with the red numbers this morning across all the board. Everything is absolutely red, and it may be bloody red by the end of the day. For sure, opening. And you have to just figure out for yourself, are you the hardened trader? Are you the one that will use people's fear and try to be a little bit rational about all of this? Because we know that OpenAI will come, and looking a little bit forward. So what lesson is it to learn? Well, you can produce good AI cheaper, which means that these big companies which just been raking in money from investors and nice upturns in the stock markets, they will have to refigure their value base, how they produce things, and in the end, you, the end consumer, will get cheaper AI. So I'm not sure it's all bad. But that being said, it will make for a rough morning start. Personally, I think that market will collect themselves. They will get over this shock. They will evaluate a little bit, and they will see that DeepSeek will struggle, because DeepSeek is probably not made for the kind of size that the AI market has become. And here I'm talking about AI connections into the model. You can have it free, you can run it free on your computer, etc. It's open source, so other people can investigate how they built it and all of these things. But if you are trying to connect to the API and getting a return back, either as I said, into your AI agents or whatever it is you're building using AI, they are struggling because too many people are trying to use DeepSeek AI and they are not configured for that sort of traffic. But they will probably solve it during a week or two. But I think market will see, no, okay, it's a new thing, it's cheap, and there will be a little shake-up. There might be a reevaluation of value of Nvidia. But if you follow me, you followed last week's podcast, I told you Nvidia may go up, but in general, Nvidia is in a falling trend. I think that will continue. 8 minutes talking about China and AI. Almost forgetting I had a very good cup of coffee, and coffee, by the way, is extremely high priced as we speak. Once upon a time I did a coffee trade, made quite much money betting on El Nino. What is El Nino? It's just a weather phenomenon, and I was betting that it would hit, pushing coffee prices up. You can bet on anything, you can trade on anything in the market. This week, my friends, will be full of quarter results. We are again heading into the quarter season, and the consensus is that the big companies, the big sevens, etc., they will come in anywhere above 15% increase in their earnings. We will see this week. Some of them will come. For instance, will Apple come on Thursday? Intel will also come on Thursday. So we will know a lot about that. But before these two companies, already on Wednesday, we will enjoy Meta, Tesla, Microsoft, IBM. I will get back to a little bit more about this. Let's just try to get back to where I started. Get some sense into it, try to make a little bit sense and see where we can end by the week. Last week I predicted a green week. This week I'm a little uncertain. We'll try to create the logic. So I think DeepSeek will start off the Monday with everyone trying to figure out where is the market headed. So I will not be surprised if today will become a very red day. Tomorrow we will have some quarter results. We will have Boeing, General Motor, we will Lockheed Martin, which I advised must be 3-4 years ago when warmongers were running US, probably still are most of them. But I said that Lockheed Martin would be a very, very good place to be long-term because they would make so much money out of all the geopolitical issues around the world and the need to arm up. So they will have quarter results on Tuesday together with Royal Caribbean Cruise Line. And Starbucks will also come. Starbucks, by the way, have tried to change. They went into all this wokeness and that caused all their prices to increase drastically, and suddenly they were struggling with customers. People simply just moving away from Starbucks. So many companies did that same thing. Now they are going back to the roots, trying to offer good coffee at reasonable prices. Quarter results will be very interesting coming on Tuesday. Will Starbucks be back on the road? They are such a big chain. Or will the consumer still punish Starbucks? You will know on Tuesday. None of these companies, in my opinion, are big enough to sway the market, meaning that if we have a red day today, that scare may continue into Tuesday, in my opinion. We will have a lot of volatility. Wednesday will be much more interesting because here we suddenly can get back to a green market again as Fed will have their discussion. Nobody expects Fed to decrease the interest rates. Nobody expects them to increase the interest rates. So the expectation is that Fed will do nothing. Trump, he is saying you have to lower the interest rates, but I believe Fed will just run their own course. And later in the week we'll know more about inflation. But after, before and after Fed, there will be more quarter results. Here comes Tesla, here comes Meta, here comes Microsoft and IBM, and these companies are for sure big enough to start sway the market. If Tesla numbers come in very good, Meta numbers come in very good, and Microsoft numbers come in very good, it will be hard for the market to stay red. So currently my logic is that, okay, we start off with a scary Monday. Tuesday may not be as scary. Wednesday depends on the numbers, but the expectations are that they will be flabbergasting good. So we can expect that to see. I'm most interested in Tesla because now everyone is talking down EV, and now it will be cheap oil, it will be cheap fuel, and this EV hysteria is being pushed down to more realistic, but EV is here to come, and some of the best advices is trying to go against the current, meaning you're doing the opposite of what everyone else is. So EV is currently not hot at all, and that makes me believe it's a good time to invest into EV. I'm doing it. You heard me when EV was sky high and everyone was screaming EV. I just sold out. I sold out my positions, which I had done quite nicely in several of these, both Chinese and American companies. I sold out and was very patient. But over the last, hard to say now, 6-8 months, maybe a little bit more, I have started to reposition myself into EVs. But they will get hammered, and as media now allow for free speech again, there will be more negative talks around EV. But it's already happened. Factories have changed the production lines, the logistics with the charging stations, everything is getting better by the minute. Batteries are getting better, and I believe, no matter how you turn it, EV is here to stay and will be the future. We will celebrate cheaper gas prices oil prices and everything, we will celebrate this moving forward. Unless more geopolitical issues happen, that will be the main case. Energy will go down, the cost of energy will go down, and you should already celebrate, because as I told you over and over again in this podcast series, energy is the main driver of inflation. So when people were screaming and chanting for war and chanting for this and chanting for all sorts of woke policies, it just had to push the energy prices up, causing the inflation and causing the grip of the inflation. Once oil and energy in general go down, there is a fair chance that also prices will start to lower all over, and inflation will start to go down. Personally, I'm not sure it will happen as soon as we hope, because there is too much other things going on, but these are the general tendency. Getting a little bit off track there. Thursday will be GDP numbers. The expectations is 3.1% for Q4, while it's expected that GDP 12 month over 12 months to increase to 3.7%. Will be very interesting to see about GDP. Europe is struggling, and we'll see how US is doing. We will also have personal consumption numbers for Q4 expected to be 2.2%, followed by Apple quarter results, Intel quarter results, and Visa quarter results. Visa, by the way, is an interesting case. Visa is super profitable company. Visa and MasterCard, they have such a dominant space, controlling the market, and have margins that anyone is dreaming of. But there is a disruption also in this market with new technology, making Visa and even BRICS countries and their own payment systems are threatening Visa. I am not sure. It will be very interesting to follow, but I'm not sure Visa has the brightest future as we move forward over the next few years. They are for sure facing challenges to their dominant space. They will fight it with everything they have, but money transactions are moving faster and in different ways already, and payment systems are also changing at quite nice and fast pace. Friday will be inflation numbers, will personal consumer expenditure numbers, and it will be month over month, where it's expected that the prices increase by 0.2 or 2.8% 12 month over 12 months. Chevron, Exxon, and Phillips oil will be at the end of the Friday. Sum it up so we can get to the end of the podcast a bit faster and not spend all day listening to the same all over again. Monday I expect to be a tough one. Tuesday could be a little bit softer. Wednesday has the thing that can sway the week, and it will be follow-up on Thursday, I think. But let's say GDP numbers come in a bit lower than expected or something, or Apple numbers come in a little bit lower, something. We are heading for a volatile. It will be very interesting week. While I screamed green last week, I am not sure about this week. I think it might start red, come with a little upturn in the middle of the week where hope is getting back, and then being crushed again by the end of the week. The momentum is there for a green week, but I think it will be a red week. What does the signal say? Well, the signal says that across everything, 29% companies are giving buy signals, up from last week's 22. Nasdaq at 16, New York Stock Exchange at 31, London 31, Frankfurt 46 down from 50, and Tokyo 36, Shenzhen China 19. National Stock Exchange was the only one to go down from 12 to 9. Across the board, all buy signals increase. They are not so high that they cause any reason to say that there will be an obvious sell signal, because usually we have to be up around the 40s. At the same time, they are not so they are not so low. That is an obvious buy signal. Will be a very, very interesting week. I bet for a red week. And I didn't say in the beginning, but Nasdaq went up 1.65% last week, while Dow Jones went up 2.15%, and S&P 500 had the best week since was one other president after inauguration that had a similar week. After all this listening, if you still like the podcast and like what you hear, remember to subscribe and like. It's the only way to make it grow. I will finish this podcast with a few more information, and of course I will tell you what I'm doing in the $1,000 challenge, where I try to grow $1,000 as fast as I can. First off, oil fell last week by $3 to $76. Gold went up $14 to 2,762. Was touching, getting close to all-time highs around 2,800. Could be it will break it this week. Absolutely high chance that gold will break and set new record. 10-year treasury yield, usually when these go up, markets go down, were more or less unchanged last week, sitting at 4.62%. If we look at the Nasdaq chart, we have a buy signals from the short-term moving average, the long-term moving average, even the relation between these two averages. The problem is that the volume did not follow the market properly last week, and that argues for a tougher week. Tons and tons of support below makes me believe that while we may have huge volatility during the week, the end will not be brutal. So I bet for a red week, that's my bet, but not by much, since there is so much support below. Something really scary have to bring the markets down. We have to go under 19,000, because after 19,000 things starts to look pretty scary. Until then, we are still in a rising trend for Nasdaq. We're just talking a week ahead. And if we look at Tesla, and we like to look at Tesla, we see somewhat the same thing, but Tesla is looking okay in my opinion, while Nvidia, looking at the Nvidia chart, we see that the volume is going in the opposite direction, and that makes for a small concern that Nvidia will have a tough week. We will just have to see. 22 minutes into the podcast, here is the $1,000 challenge. I set out a challenge because I did this when I started my trading. I had some $400 to start with, and I was able to grow these to very, very nice levels, going the risky way. Actually, I was mainly trading on oversold on the relative strength index stocks, which were oversold on the relative strength index. They fall too much, and you just pick them at the bottom, try to find the support level at the same time. You pick them and you go for these easy gains. I did that for, I don't remember exactly, but it was probably more than 2 years I did that, growing my portfolio extremely nice. That was how it all started. Still give me goosebumps remembering back to those days. Technical analysis was in the very beginning, existed for many, many years, but it was slowly starting to catch some attention on internet. And I obviously fell totally in love with technical analysis, and here you have Stock Invest, etc., which have been built later, developed these algorithms many, many years ago, and keep developing new algorithms trying to help you reduce your losses and increase your gains. Reduce your losses by using information, either it's trend lines, support from accumulated volume, whatever it is. It will help you narrow down your losses. On top of this, you should follow the fundamental information. That is what I'm trying to give you in the beginning of every single podcast, to give you the big overview, because doesn't matter how good the stock is, if the market, let's say Nvidia tanks today by 5, 6, 7% or 10%, it pulls the market down. Your stock can have the best technical point there is, buy signal from absolutely every indicator there is. It will not help if Nvidia, as being as big as they are, is pulling the market down. It will just suck the bottom out of the market. So you have to follow bigger lines in your trading. Now, many years later, I'm trying to see if I can do what I did back then, but maybe I got old, I got softer, because it's really going slow. $1,000 challenge, which I started more than half a year ago, is sitting at $2,453.80. I only managed to double it. We were up at 4,000, then I did some bad mistakes going too hard on stocks. Different stocks, taking a loss, and now I've been sitting in NIO for a super long time, buying NIO at $5.10, because I believe NIO is super undervalued in terms of the space, and I believe that you will see profit margins in the industry will increase quite nicely as we move forward. Their technology is just getting better, their production volumes are getting up, everything is being streamlined. I think the profit margins will absolutely get better, and I just think it's a good buy. But sitting, and last week did not offer any really good hope. So while markets were up, NIO fell, but not by much, from 437 last week to 429, currently down 15.88% since I bought it, almost 16% down. Stubborn, sitting here and believing, and you should not believe, you should act. We should go into more and tougher stocks, take our losses, that's how you do it, and move forward. But something still tells me that it is the right place to be. Will it be the doom? I told you from the very beginning, this is a high risk game. Playing the high risk, been lucky through several stocks, then we hit some stocks who is going very bad. NIO can absolutely be one bad, it can fall easily down to $2. Markets decide where it goes. My gut stomach feeling says me it is the right place. It is having some of these indications which I absolutely like a stock to have. At the same time, there is plenty other options. Being a tough week, there was a lot of volatility. We'll just have to see. Maybe NIO will not be able to produce at all. Maybe NIO will be one of the few stocks that will manage to go different way than the market in general. Still staying in NIO in the $1,000 challenge. Hopefully I can report much better numbers. That, my friends, 27 minutes. We always seems to end at half an hour. No need to talk this long. I will have to try to shorten the podcast a little bit. I often say that I should shorten the podcast. But when you start to talk and there is so much to share and so much information which I think is important, they tend to get long. And that will be my last few tips in this podcast. Make sure to keep an eye on the headlines. You don't have to read everything, but scan newspaper. Make it a morning habit if you have the chance before you go to job. Some are having kids, so you have no chance at all. Some of you have a better time, maybe being pensioners or students, whatever. You have some time. Try to make it a habit to check the news, even if you're taking a commute to job, bus, train, whatever it is, subway. Try to make it a habit to just scroll quickly through the main news. Use many different sources. Do not get stuck into one source. Use different sources. Just those articles which are very good, you should go a little deeper, try to understand what it is, but just by going through the main headlines and the ingresses, the first part of the topic, you get a fair understanding of what is moving. And after some time, you realize that you start to see some certain patterns, and these patterns, they reflect into the stock market. You are more prepared, because sometimes it's all about the bigger lines. You may be in very, very good positions, my friend. You may be sitting in the absolutely correct stocks, but if markets tank due to, as I started the podcast with, something as simple as DeepSeek from China, doesn't help how good your positions are, because the market is going down. Many of you will then sell in fear, or you will have to sell because you are in borrowed positions, just to see your stock being up at the end of the week, or Wednesday when Fed will talk, or some of the quarter results will talk. I hope you will have the absolutely best week in front of you, and that by the end of the week your portfolio will be much greener. I also hope that you will be back in next week's podcast. Until then, just have a super week. Bye.
Welcome to StockInvest.us Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information, you agree and are held liable for your own investment decisions.